So good evening. This is the journal of third week of February. So this will be the first part. So this is the trend line. Four touches is there. Fair value gap is there. Means there is an imbalance. Market breakdown, but it didn't continue to fall. See, after a breakdown, another accumulation means there is a chance, high chance of market to fall again, but it didn't fail. So the conclusion is, even though you are right, sometimes the market won't work. Same here in XRP. See, the trend is in downside. Maybe took the support of this area and also a breakout. But before that, it might have gone little more down, but it didn't go. Instead, it started to go up. So this trend continuation: one touch, two touch, three touch, four touch, and then breakdown. Again breakdown. So traded with the trend. And here is the mistake: one touch, two touch, three touch, four touch accumulation. If and before breakout there is lot of damage here, lot of SL grabbing. See, those who are entered at this breakout, their SL was here, taken out. Again after this they tried to go up, they have kept their SL here, again their SL got damaged. So this kind of setup will work perfectly. And so look for the liquidity hunt. If there is a liquidity hunt, the percentage of winning of that trade will increase by threefold to fourfold. And this kind of setup is dangerous, but see, both side liquidity is there and there is a breakout. So when there is a breakout on the upside, so this liquidity and this liquidity, but first try to get as low as possible, means getting out with 80% and leaving the 20% for higher returns. Similarly in Bitcoin, today I traded this one. See, one liquidation area, here also one liquidation area, symmetrical kind of pattern. And after a fall there is a change of character and there is a probability that market will go higher. So see, I took an entry at this breakout. I took an entry, and then market went up in just second candle, in 15 minutes second candle, 5 minutes 2 to 3 candles. I was not so sure of this breakout, so I entered because of my backtest data. And another thing, in this kind of breakout, see which side accumulation is there. If it is in upside accumulation, means there is a probability that market will come little bit more down, take the liquidity, then it will go higher. But if you see, the accumulation is in the downside more. Here, see, here it is all the accumulation has been done. So those who have entered here, their result will be in upside, right? So mm, the liquidation means market will try to take the liquidity of the upside. So first target is the liquidation. So I took an entry here and kept my SL. So 1:2 was here, so I didn't get out with a huge profit, but it's okay, part of game. And my target was much far, like this area of Fibonacci. So if I have to hold up to this, I have to keep the SL far away. But I didn't keep, means I trailed my SL too quickly to this area, not too quickly also. If it is going up, if it comes down and break this trend line, means it might come more down. So I have traded my systematically. It was part of the game. So if I have not trailed my SL to here, then the percentage of loss, means here I have earned like 30 rupees, here SL was like 20 rupees. So still I was in profit of 10 rupees, that is the brokerage. So I have traded perfectly systematically, and if I have not trailed my SL here, then I would have gained 1:2 properly. And if I am still holding the rest of the 20%, then my target will be this area. So it's all part of game, and the word is there. The sailor means the fisherman who goes into fishing with the boat. They recover or they fix the net during a storm. They don't sit idle. So during the accumulation phase, practice and practice so that you can see the pattern before it breaks out or before it takes place. So practice well, as I have not practiced well and I have not seen this BTC. So I was thinking that market will not go, market there is no setup in market, there is no setup in market, so I didn't see this pattern. That's why always hunt for the setup, means to see if there is a setup or not, then go for it. See, I took a trade in GBP Australian dollar. So I took an entry here, I kept my SL here, and I targeted this liquidity. So what happened? Market went up, means accumulated at the entry area. That's why, that's when I need to be cautious. So if I have kept my SL here and in target here, or and placing my entry over here, my SL will be here and my target will be here. So if I trade like this, my SL got minimized and my target 1:2 easily achieved. So it's part of game. Entry with half quantity here and another quantity here. This trade was a good setup. Still it didn't work. One, yeah, it worked, but after taking out my SL, one touch, two touch, three touch, four touch. And another trade was in GBP CAD. So in GBP CAD, what happened? See, there I didn't keep 1:2, means the SL big. Here I kept the SL big, but it was accumulating here, it was not going. So at first this pair only started to move to the direction of my trade, but it didn't work and it went up high. So similarly, means GBP correlation is there, but still it didn't work, even though both are 3 to 4 GBP pairs, there was a same pattern, means there need to be bearish, but it didn't go, maybe because of some news. So this was GBP JPY. See, in GBP JPY it moved to the target. Entry was here, my SL would be here, target would be here. Let's see. See, this 1:2 easily achieved. So you don't know which one will go and which one not, but there was a probability of going this higher because there is a change of character here and market retraced and then again and the breakdown. So this had the higher probability of working, and you cannot leave every trade part of the game. You have to find out your own problem.